just to add a little bit onto that too, that just came to my head as well, is that impairment is going to become an issue once again this year. And last year, it was sort of easier to get through it because, well, it's a temporary decline in the marketplace and things will turn around. But this year, things that have not turned around, impairment will become more and more issues now too. And we're sort of in that process of preliminary discussion with the regulatory bodies to get an understanding of how their viewpoints are as well. The market has not recovered, and there are still big balances out there capitalized from mineral properties, oil and gas, or any other business. And so we'll sort of update that as we go along as well, and sort of what are the major things to consider at year end and whether or not to take any impairments on any of your capital assets. So my portion here is global issues, and what we did was we reached out to some of you in the room and some of you not in the room, and because there's so much international experience within this city globally in various jurisdictions, and we wanted to get your input on sort of what you saw as your top 3 issues in the jurisdiction that you've had experience with. And what we did with that is we compiled it and put it together, and I'm going to present it right now. And it was a very fascinating feedback from everybody, and very grateful for that. And I personally learned a lot, and hopefully you'll find some interesting factors here as well. So first off, the countries that we surveyed. Now, we didn't survey the countries, but we surveyed people such as you who have had experience in those countries. And so I'll just list them out here in case you can't read it out, but we talked to people from Albania, Argentina, Australia, Brazil, good old Canada, Chile, China, Colombia, the DRC, Dominican Republic, Ecuador, Germany, Ghana, Greenland, India, Japan, Kazakhstan, Kenya, Kurdistan, Lithuania, Mexico, Mongolia, Papua New Guinea, Peru, Russia, Serbia, South Africa, Tanzania, Turkey, United Arab Emirates, United Kingdom, United States, and Zimbabwe. And so I think that's about 33 countries. And many of you have given me the top 3. And so we compiled that and we came up with what we found, the top 15 sort of global issues. And many of these things won't surprise you. In fact, there's parts of me who kind of want to walk around the room and say, what are the top issues? And since I'm saying that, can anybody just raise their hand, give me what they think the top global issues? And it doesn't have to be just mining, by the way, because we surveyed other industries as well, such as technology and manufacturing. And so what's the top global issue for somebody over here? Don't be shy. What's the top global issue we're finding out these days? Can be audit, taxation, accounting, political, anything you like. What do you think, Anil? You look like you're smiling, got an idea. Yeah, that's an issue. I'll get to that one in a moment. It relates to one of them as well, so that's certainly an issue out there. So I'll start. So here's sort of the consistent thing that we found throughout, no matter which jurisdiction. There's incredible consistency out there. I mean, whether it's South America, whether it's Africa, Australia, Europe, the problems are similar. Pretty much 95% of the answers that we receive from you fit into that 15 global issues categories out there, which is quite fascinating. So wherever we're from, as humans, we're facing similar issues. There's a large voice of frustrations towards authorities, both here in Canada, the United States, and globally. The markets have been down for a long time, but regulation has not softened, and it seems to be that's a common theme globally. Governments who were receiving lots of, whether it's being exploration money or investment money, has seen those decline significantly, and they're looking for other ways to look for funds from the company. So there is a voice of frustration out there. Fear and uncertainty, that certainly is out there. When are things going to turn around? What's happening in our backyards versus globally as well. And some of that is media fed, which we found to be quite consistent from answers as well. But hope has not faded. All is not lost. These things, just in the darkest of hour, sometimes the light shines through. So we're quite hopeful that this market is turning. And I think it's turning as we speak. It's just, it can't quite feel it out quite yet. So without further ado, here they are. And these are not in the order necessarily of the most frequent. They're just sort of the top 15. Number 15. Tax regulation in emerging markets are in a constant state of flux. So we're finding that, particularly in the mining industry, with lower expenditures out there, there's constant changes to either tax rates, tax regimes, often based on government needs. VAT, or our equivalent of what we're calling GST, and GST is becoming a problem in Canada as well, are becoming harder and harder to collect. In some jurisdictions that have previously had decent regimes, such as Mexico, it's becoming even harder now before. Large parts of Africa, we're seeing similar trends as well. And so VAT is becoming harder to collect, especially as costs are being reduced, and the governments throughout the world do not want to cut out checks to the companies. And so we're seeing appeals. We're also seeing what companies believe to be unfair treatment or unfair allegations regarding the VAT practices. And so we'll see where that ends up being. In Canada, we did a tax seminar last month as well, and we're seeing a lot of the Canadian companies who are shell in Canada but have operations globally often are getting rejected for their GST that they're paying in Canada. And unfortunately, there hasn't been like a proper court ruling system yet that defends the position of why companies in Canada should deduct and claim GST, but we're hoping that's coming. So tax regulation in emerging markets, not just emerging markets, in Canada as well, are constantly changing depending on the needs. Number 14, the training of foreign staff. So a lot of people here are involved in consolidations that require global accounting. We're seeing that often staff members in foreign jurisdiction are entering accounting records based on tax regulations and not necessarily accounting regulations. And there's a lot of countries out there that have very specified entries that you have to make. And so it's very important that the foreign staff that you are dealing with are in tune with accounting and not just tax. The trained staff is an issue. Some of that is the communication, language. I'll get to that in a moment as well. And ownership and accountability. Here in North America and in Europe, we strive for ownership and accountability. And depending on the regime, that is often rare. Number 13, political. That's a very common one. There's often changes in political parties in various regimes. New political party comes in with their own agenda, setting new standards and new rules that are affecting a lot of companies, and that certainly is a risk. There is, as mentioned, less spending on cost, and it caused government to seek out funds otherwise. We've seen things such as equity tax in Colombia a number of years ago, which is possible for it to occur again. Basically a tax just on your equity balance, and there's some fear that that could happen again. And nationalism is causing smaller companies to hurt even more, especially the ones that are operating at higher cost. And there is a sense of nationalism resources as well, where often governments are wanting to make sure that they get a bigger piece of the pie. Difficulty of knowing who is making the decision. Here in Canada and the United States, we have a hierarchy of authority that plus or minus we understand, plus or minus. But in foreign jurisdictions, often when you think you got a license for something, sometimes you realize that wasn't the right person who's making a decision. And in an emerging market, sometimes it's really difficult knowing who has the final say. And so that's a challenge for sure. Number 12, falling commodity prices. That one is an obvious one that isn't surprising. Declines in gold, iron ore, coal are clearly making investments less attractive. Costs have gone up significantly in the last 5 to 7 years with the increase in commodity prices. I remember when I started at the firm, gold was, $297 an ounce, and there were some companies operating under that. And so today, what's gold today? $1,200, $1,300? And so costs have gone up proportionally over the years as well. But just like moving into a bigger house is a lot easier than getting used to moving back to the smaller house. So costs have not lined up yet. Even the majors have not put their costs up in line as well, and certainly not the juniors yet. So that's an issue. Number 11, lack of mergers and acquisitions. A couple years ago, everybody remembers that article. It was a famous one in town where how many companies in Vancouver had less than $200,000 in cash and how many of them will survive over the years. Surprisingly enough, most have survived so far. We'll see after this year and how it will be. There are a lot of companies who are on that brink. But what we are surprised of somewhat is the lack of mergers and acquisitions. We would have thought that there would have been more of it by now. There has not. We're still expecting it to increase as the time goes by, but not yet. And valuation is still an issue. There's a lot of companies out there who strongly believe in the projects, and valuations might still be unrealistic when they're trying to merge with another. And there's a little bit of a lack of acceptance in the new environment. We all got used to decent times for a number of years, and it's been difficult to accept the new regime out there. But one thing for sure, it's never going to be the same. I personally think it's going to be better than ever, but it'll be in a different form. And so the acceptance of the new environment hasn't quite set in yet. Number 10, this is sort of in line with the previous comment, but difficulty in knowing who is at the top is making decisions. Again, we've seen various regimes out there that tax companies differently than other regimes. So for example, there's countries out there that have particularly bodies for oil and gas, and countries out there have particular bodies for mining that tax you outside the corporate world. And some countries allow you to have this thing called tax neutralization, whereby if you're paying some tax on imports or sales, the corporate level you shouldn't be paying the same tax rate, because otherwise you're doing this double taxation thing, but the bodies aren't necessarily talking to one another always either. And so we've had a number of clients who have been effectively double taxed for something that they should have been tax neutralized for. And while there's appeals in place and processes to make that happen, it's lengthy, it's timely, it's cost consuming as well. So just when you think you might have a permit, you might get denied. And so, and that's, and we've seen that happening in places like Mongolia for rejections of mines. We've seen that here in BC, and so on. Number 9, board level priorities are inconsistent. We've gotten lots of feedback that at the board level, everybody knows cash needs to be conserved, costs need to be managed, but often the company's plans are not aligned with the cash conservation techniques. So it's tough because companies want to do a lot of things and they want to set up lots of policies in place, but they don't have the money to do it. And so it's a little bit misaligned. And this is my own personal comment, right? Market is down, but egos are still the same. And again, goes back to the comment that we have this sense that things are the same, but they might never be the same. And so we have to sort of check our egos out the door to some degree and accept a little bit the new reality out there and focus on the opportunity rather than the problem. Foreign exchange risk, another big one. Many countries depreciated this year against the Canadian dollar, against the US dollar, which can be good for us in terms of operations because our Canadian or US dollar might stretch out a little bit further in other jurisdictions. But it's clearly is a large risk because we don't know what's going to happen going forward and managing those expectations. Number 7, repatriation of funds back to Canada. So that's a big one too that we found very commonplace. We've seen these structures get set up between Canada and various jurisdictions. And we set up these intercompany loans and so on, and sometimes we make a win, and a bunch of cash gets piled up in a subsidiary. Well, that's great. Let's move the money back up to Canada and dividend out to shareholders, and away we go. But what we're finding is that to move money back to Canada becomes difficult. Primarily taxation. There's withholding taxes. There's approvals. For example, many of you know when you send money down to South America or to Africa, that it often has to get registered as capital and not as intercompany loans, primarily because many jurisdictions do not allow you to have a shareholder deficiency. So if you have a shareholder deficiency, which effectively means your liabilities are bigger than your assets, then sometimes you have to get your shareholders to sign off on saying that they guarantee the debt of the company. And so instead of registering it as debt, a lot of countries registered the amounts as capital, i.e. as if you're issuing shares to the subsidiary. Of course, the problem with that is getting the money back up to Canada doesn't become a repayment of a loan anymore. It actually becomes a recontribution of capital, which becomes difficult and challenging sometimes. So that was a very common thing as well. Local customs and cultures, clearly there's different practices in many jurisdictions. We've seen that all over the world, especially in questioning authorities in many countries where the staff does not question authority, whether or not they believe it's right or not. And then different language barriers, different communication barriers. Parts of the world are very direct, parts of the world are very diplomatic, and parts of the world speak different languages. And so those are always global issues. Cash versus accrual accounting. You know, it might be hard to believe, but there's a lot of countries out there who still use cash accounting, and many of you know that. And what surprised me actually recently is Japan, for example, uses quite a bit of cash accounting, even some of the bigger companies. And the accrual system is still foreign in a lot of jurisdictions, which we can appreciate because, you know, in this country we give credit, but in a lot of the other countries you don't. So unless you show up with an invoice and you give the person a check, you know, you're not registering an invoice. In fact, there's a lot of countries where you can't enter the invoice because if you do, then you're subject to VAT, to withholding taxes, irrespectively of whether you've gotten paid or not. So a lot of people are looking at that and saying, well, we're not going to record this invoice until it's paid, because if we don't get paid, then we can't, you know, we're remitting money to the government that we don't have. And so, of course, in Canada, under IFRS, well, you got to use accrual accounting. You can't just do cash basis. And so, you know, the risk of liabilities is larger in emerging markets because you have your period end, and then, you know, you do your basic procedures to get all the liabilities in there, but often vendors will send in invoices well after the fact, and sometimes months after the fact. And there's a viewpoint that I heard from a lot of you that, you know, at the end of the day, you just enter what the invoice date says, irrespective of when the service was provided. So, of course, under accrual accounting, if we've got an October year end, and I'm doing a bunch of services for you, but I don't invoice you until November, in theory, you got to accrue that in November. So, I mean, in October, but regardless of the date of my invoice. So accrual accounting versus cash accounting, surprisingly, is still quite critical. There are a number of countries in Africa who don't use checks, who still just use cash. And so if you're an employee of those countries, you just literally, you show up every 2 weeks and you sign a piece of paper saying, here's my salary that I received in cash, and that is all. There's lots of places out there that don't have bank accounts yet. And so we found quite a few countries in Africa, particularly, that still not only do not use cash account, but don't use checks or wire transfer, they just use cash, which of course is challenging for Canadian companies to send money down. So that's 5. Number 4, the media. So that was Neil's comment. The media paints a picture that is often not true. We think that, you know, that's commonplace for a lot of countries out there. You know, Argentina is certainly one of them recently, and while some countries have curtailed their expenditures there, a lot of companies have not, in particular in the oil and gas sector. So, you know, the picture doesn't always tell the full story. It's a viewpoint of the media, and so a lot of you are not only ignoring that, but seeing the opportunity of not always going with the grain of what the media says. So that's number 4. Good results are not being rewarded. So, and I think lots of people here can relate to that. You know, you've had positive results, whether it's earnings or drilling results or a great new board member or, you know, the ex-Microsoft guy joined your board and, you know, and there's hope that typically positive results are going to have impact on the stock price. But we have not seen that. In fact, we've seen drilling results or any other results not to be useless, but to be irrelevant. And they don't seem to have any effect on share price recently. It's not an all thing, but it's definitely commonplace. Number 2, larger firms are increasing supply to force higher cost firms out of the business. So this was some particular feedback from a number of jurisdictions where a lot of the large firms out there, whether it's in mining or oil and gas or other industries, and what they're doing is they believe, or at least a viewpoint, is that the larger firms are increasing output, supply. So, of course, increasing supply means potential fall in commodity prices, and the firms that have higher cost models are hurting even more. So, you know, the major strategy viewpoint is that let's just drive out the meat-tier producers out there, increase our supply, and once they're gone, we'll start managing that again. So it's the sort of the David-Goliath theory a little bit as well, and we're seeing that out there as well. And the number 1, this is probably the number 1 global issue that everybody's confused, is there's no money out there, it seems. Okay. I mean, I don't think there's a person in this room who won't make this case. Like, anybody thinks it's easier to raise money for junior mining these days, by the way? I mean, there are projects that are getting funded out there. We're seeing certain commodities, uranium's getting interesting again. And, favorable jurisdictions are getting funded again a little bit. And of course, other industries are popping out. But that's definitely the number one problem, seems to be that there's just no money out there. Well, there's a ton of money out there. There's no doubt about that. It's just how it's going to get deployed and where it's coming from and so on. And so eventually, human nature will be, well, we're going to get up in the morning and we're going to do something. Unfortunately, none of us really know exactly when that's going to be, but hopefully staying the course will do so. So after that, then I said to myself, well, there's no point in just putting all the issues and just having a sad case of 15 global issues we're all seeing out there. And then we sort of picked our brains a little bit and sort of saying, well, what are some of the solutions out there? Not just focus on the problems, but let's focus on what we can all do together to make the world a better place. And so here are some of the solutions that we got some feedback on. Have strong local partners that support you. Those of you who have done business in international operations know that you got to have a partner on the ground that you can trust. You got to have a partner on the ground that speaks the language, that understands the culture, that can inform you of the business practices on the ground as well. You got to have a good lawyer on the ground too. You got to have a lawyer who knows the rules, who's up to date on the regimes, and hopefully has some connections internally as well that can provide you some insight. And you got to have the technical people. So the partners on the ground is crucial. No doubt about it. Work on developing relationships now, not just in good times. One of the favorite things that I heard from good clients that have said is that everybody's looking for money now, and everybody's looking to talk and raise and all that. But the best time to raise money is when everybody else is already raising money. So you want to come see your people when you've got money in the bank, not when you don't have money in the bank, because they're used to seeing everybody now lining up for it. So the idea is that developing relationships now is crucial because these things will turn around, and when we have these relationships together and forming trust with one another, when things do return, that's when growth can come back. Outsource your payroll. It helps control and supports tax issues. So a lot of, in Canada, it's very commonplace. We outsource it to, what's the company called? Ceridian? And lots of local jurisdictions have their own payroll services as well. And what we find with a lot of our clients who do outsource it, especially to a reputable payroll firm within that country, is that they take care of withholdings, they do the calculations, and often the local governments will be happy with that because they know who's doing it. And we have found that even though a lot of companies still get audited by local tax authorities, it does seem to reduce the risk of error as well as on audits. So outsourcing your payroll, typically from our experience, doesn't seem to be an overly expensive way to do it, and so that's important. Contracts as well. We got feedback from clients about, a lot of jurisdictions, you got to have a contract. I mean, I don't know if in Canada, if it's legally, you have to have a contract with an employee, but a lot of jurisdictions you have to, otherwise you can't employ them. Understand the local accounting system and realize most of them comply with tax often, not necessarily IFRS. So, there's one example there's a couple examples that we received in a couple countries where you can only record intercompany transactions up to a certain amount per year. So what that means is that, say you've got a Canada relationship with a South American country, and that particular country only records intercompany transactions to a certain point, because there's only a certain amount of intercompany transactions allowable for that year. And so there's a tendency to think, well, why is the intercompany balance off? Well, I don't know, it's probably foreign exchange, it's got to be. But often it can be actually that they might not record any more transactions to a certain point, so we got to look out for that. And that's why communicating with the staff on the ground is really important to understand what they're actually doing. So I found that one comical. Spend time on the ground to understand. Of all of our experience in any country that we've been to in the world, and you saw our photos in the beginning of we're holding up our sign everywhere, there is just no better understanding of the business, of the accounting, tax, whatever you want to call it, than being face-to-face on the ground. It's invaluable. It's the only way to get to know your people down there. It's the only way to assess competency. It's really the only way to build trust as well, is the face-to-face. So, we're very adamant often, and we are about visiting your sites in particular countries, and sometimes it's because we like a road trip, because we like to travel, and it's kind of fun, but it does really add a lot of value to the audit. It also adds a lot of value from a regulatory point of view, not just from the audit side, but on the company side. If you're a CFO, if you're a CEO, if you're a director, and you visited the operations, there's a whole level of understanding than sitting in downtown Vancouver and emailing. And I'm sure many people can attest to that. Increase communication on a corporate level. Get into a few fights, hash it out in a boardroom and brush it off, because sometimes we compile a list of our clients and we see, maybe 10 companies working in similar jurisdictions, right? Almost in the same country, and sometimes in even similar parts of the country. And you sometimes say to yourself, well, if you just merge those 10 companies together, you might get a nice little superstar riding out, and that's better than all of them going sideways. But we are finding on a corporate level, it's getting difficult, and often communication, especially hard communication, is being avoided. And it's not necessarily just on a corporate director level, it's everywhere, right? It's happening in the accounting and the legal professions, but we got to communicate, and we got to keep talking. And we don't need to think that just because we're communicating, we're going to solve all the world's problems. But most of the ideas that are going to come up are nothing that we're thinking of right now. It's just through conversation. And so just because times are tough and there's lack of cash, and directors aren't getting paid for their fees, and that's commonplace, we think that everybody should just keep on talking. And then you get into a few fights here and there, but we just got to get over it, because we got to get out of this. Checky goes out the door, I mentioned that. Any action is better than no action. I was talking to a number of people who were walking here before and are saying, well, we're taking just a few sort of like high-level risks out there. We're doing a few samplings here and there on the kind of what if, and maybe there's low chances for success, but taking action is better than no action. And what we find is that taking some action, whether it fails or not, it doesn't matter, because you're going to learn something from it. So we got to be doing something, and sitting around waiting for things to come back probably is not going to make us win this game. A good story, boy, we need a good story out there. We need to hear of a nice company, new production, showing like real, true profitability, right? Based on current prices. So we need a nice story out there to get this market juiced up. We need to show that there's a junior or mid-tier company out there that can produce at a mid-level and can be profitable based on today's environment. And that's hopefully, that's going to come. And so those are sort of the solutions that we came up with on potentials. There's no obviously, one Band-Aid for the global issues that we're facing, but just some potential ideas. Oh, patience. Patience, that's hard. Not everybody tells me I'm a patient man. No, my wife does. But what we know of today wasn't predicted yesterday, and what we know of tomorrow isn't going to be what we think today. All the analysts in the world, you can say all the investment bankers out there, those who were right were maybe lucky, and those who were wrong had a reason, and those who were right will always believe they're going to be right. But we got to have patience and stay the course, and not give up, because we don't know what's going to happen tomorrow. Any day things can turn around, and there might be a good window out there to raise money. Pray! The reality is, as optimistic as we can all be, everybody can have their different forms of praying out there, and that's kind of a joke more than anything, but there is hope out there. Okay, cool. So that was sort of my little bit.